Now, if we can just go back a little bit in terms of, for listeners who are unfamiliar with litigation finance, could you please explain it to all of us in simple terms?
Yes, definitely. It's basically the process of funding a legal case on behalf of somebody because they can't afford to run the case themselves. So these law firms that we fund have lots of different legal cases that they run on behalf of their clients. Their clients can't necessarily afford to pay all the costs for the lawyers, but also the disbursements attached to a case. So that's where we come in. The law firms take on the case. We fund the case itself. They run it. And then when the case settles at the end, that's how we get paid back. And hopefully, if it's successful, the end claimant gets back their damages. The law firm gets their fees. We get our money back plus our interest. And it's a kind of win-win scenario
Win-win
for
situations.
everyone.
And why do you think litigation finance plays such an important role in access to justice? Because obviously there's a claimant on the other end.
Yeah, exactly. It's allowing people access to justice that wouldn't be able to afford it otherwise.
Yeah.
So you've got people that want to claim but can't because they can't afford to do it.
Yeah.
Like, litigation is such an expensive process and it could take years.
Yeah.
So it's not like you're fronting a few £1,000s and then you'll get it back in 6 weeks' time.
Doesn't happen.
Some cases could take 2-3 years to settle and people can't always afford the upfront and ongoing capital. So it's given people the ability to claim when they couldn't afford it otherwise.
And what misconceptions do you think people have when it comes to litigation finance? Are there any? And if so, what do you think there might be?
There's two kind of sides to litigation finance, two kind of big sectors. There's the big cases that you probably hear about in the news, the big court cases with two big people fighting against each other, and those could take years to settle, and the settlements are huge, multi-millions, if not billions. And then you have the other side of litigation finance that is the kind of small value claims at a high volume, which is end consumers, the kind of normal day-to-day person trying to claim some money back through redress schemes or because they've been wronged in some way. I think when people hear litigation finance, they always think it comes with massive risk, massive returns,
right,
which is to some extent correct on the one side of the market, which is the big cases. But we work in the other side of the market, which is the kind of small value, high volume claims. And the way that we package it all, we mitigate that risk and any downside. So litigation finance normally in people's minds equals big risk or gambling, binary results.
Got it.
But that's not all that is there. That there's a lot more to it, and a lot, I guess, other avenues that you can explore within litigation finance that eliminate those kind of big gamble conceptions.
And how do you evaluate which cases are worth funding? How does that process work?
So we tend to underwrite case types and law firms rather than just an underlying case because of the nature of what we do. Like the bigger case stuff, your funder will underwrite the case, like legal opinions will be really important. The case type as a whole, we're happy with the case law, we're happy with the legal precedent set in the market. Then as long as there's a good operating law firm handling that case, we will fund it. So our case opinions tend to be like by counsel or a barrister at the initiation of that case type or when we start funding it to get comfortable that there is, I guess, strong enough legal precedent and case law that supports the settlement of a case.
Got it.
And then it's down to the individual criteria
that the law firm will follow.
Exactly.
And do you look at their success rate? So you do due diligence them and look at the past case laws and success, and so that all is taken into account.
Exactly. That's part of our kind of firm level due diligence that we do and underwriting. That we don't expect 100% success, of course, but we expect above 80%. And as long as you can maintain levels above that, it's sustainable.
Got it. And so what would you say are the key risks in litigation finance compared to more traditional investments?
I think it's understanding the asset. And that's why I think I find it so fascinating and niche. And the experience that we've built over the years is such a kind of core thing to our business, because monitoring it and valuing it is very, very hard. So someone, if they didn't know what they was looking for or looking at, then that could pose a huge risk. So somebody going blind lending into a law firm, I'd say run a mile. But we've built structures to make sure that everything that we do, everybody we lend to is monitored. So from day one, we don't lose track of it. We know exactly what's going on. And the risk is you leave them to it, they don't run the case properly, and bad things happen at the end of it. So understanding how that works is really important. And then putting other risk mitigants in place that help support the risk as well.
And so what frameworks do you use when making high stake investment decisions in some of these legal cases? I know you talked about sort of the law firm, the case precedent, et cetera, et cetera. Are there any other frameworks that you would consider?
Our underwriting framework, if you like, is huge. It looks at so many different things because it starts from case type to how they process it, to who they've got processing it, to what systems they're using, what criteria they're using, so what insurance very they've detailed. Got. So yeah, it takes weeks to do.
And how long would a typical due diligence process take if you were to onboard a new case type, a new law firm?
So a new law firm onboarding, which would typically include everything, can take up to 12 weeks. 8 to 12 as a range. Yeah.
Okay. And how do you balance financial returns with the ethical considerations? Because obviously some of these underlying cases touch on, some of these cases.
Yeah, definitely. I mean, I would say that all of the cases that we fund have a consumer element within it that we like and support and are very happy to be backing of it. I think if something come across our desk that didn't fit our ethical, I guess, criteria, we wouldn't fund it. It's very simple. I wouldn't personally cross that line, and I don't think my investment committee would cross that line.
Are there any examples we could have of what you wouldn't touch?
Well, we've never come across anything that's ever really brought that crescent to light. And most of the consumer claims are very pro-consumer.
Got it. There's nothing that would make you... Yeah. Because you are dealing with, as you say, consumer claims. Yeah. Okay.